So good evening, good morning, good afternoon, depending on which part of the world you are coming from. Thank you for joining us. It's a real privilege for us to have you on board today. My name is Lyndon Booth. I am the head of Global Marketplace at Migrate. And today I'm joined by two of my colleagues, Lee Rush. Good evening, Lee. I believe it's evening where you are today.
Hi, not quite yet evening, afternoon here, but we're heading there. Hi, everybody. I'm Lee. I head up communities at Migrate, and it's great to be with you on our next WealthE Wednesday. Quite staggering to realize that we are in the last quarter of 2019, and it definitely, with the 1st of October, signaled a change in weather here in the Middle East. We can definitely feel that it's getting cooler, so we are doing a little happy dance. And I know that there are lots of people that are coming out of winter and doing the same happy dance for the exact opposite reason. Looking forward to some heat.
Thanks, Lee. And which part of the Middle East are you in today? Because I know you do spend quite a bit of time moving between places.
Today I'm coming to you from Dubai, and it is the first day today that we haven't had humidity. So we are excited.
Well, Lee, thanks for joining us. Great to have you here. And good evening to Paul. I know it is evening in Australia.
It's 9 o'clock in the evening, and I've been attacked by the skin cancer doctor today. He's burnt things all off my face, and I've got bandages on, so I'm more the worse for wear. But still, you know, that's one of the crimes of living in Australia and the thin ozone layer and everything like that.
Paul, welcome. Great to have you here. Thanks for being online. I agree with you. I'm based in South Africa, and I think we all know that when you're at the latitudes we live in, we have to be very careful, and we certainly do need to look after ourselves in that way. But thank you very much for being in with us. For those of you who do not know Paul is head of our global compliance. He's a board member at Migrate, and he's also got huge experience in the space of crowdfunding platforms. He was one of the pioneers in global crowdfunding. He started the first crowdfunding platform. Paul, how many years ago was that ASOP was started?
Yeah, back 2005.
2005. So certainly in the very early days of crowdfunding. And so Paul is here to add his insights both into real estate, but also if anyone has any specific questions around the compliance and the crowdfunding, please. And then, of course, welcome to all of you. And we'd like to really find out a little bit about who you are, where you're from. So we want these sessions to be as engaging as possible. So our request is please just quickly go to the section on your GoToWebinar display. You'll see there's a place there either for chats or questions, and just drop down which part of the world are you currently sitting in. Which part of the world are you currently sitting in, so that we can gather up our global audience as you've come in from all the different places. And let's see, some of those answers are coming through even as we speak. Lee, can you maybe just, I'm on my laptop today. I'm not in my normal control room, which has 4 screens, so I can see everything at the same time. Today I'm more mobile on my laptop, so I can't see necessarily all the answers and the questions coming in. But can you maybe just give us any insight as to where people are coming in from as soon as those answers start arriving?
So we have got people from South Africa, various parts of South Africa, Johannesburg, Mpumalanga, Cape Town. We've got Germany, Switzerland, the UK, Azerbaijan. Wow. So we have got a whole lot of people from all different countries that are joining us, and it's exciting because it really just shows that we are a global community. And that is one of our greatest points.
Brilliant. Thank you, and welcome everyone from whichever part of the world you are in. It's really exciting to have you join us today. So for those of you who this is your first time with us, and we will release a poll in about 2 or 3 minutes just to try and get a sense of our audience. How many of you are investors? How many of you are just really coming onto here for the first time? How many of you have been on these particular monthly deal updates before? We will release that poll, but just for all of you, the purpose of today, of this session that we're about to go into now, every month we take our investors and new members through the deals that are on the platform. We give a bit of insight as to why we selected these deals. We give a bit of insight as to our deal selection process. And then we really are here to answer questions. Any questions from first-time investors, from experienced investors around any aspect of Wealth Migrate and the journey that we walk with investors. So please, at any time during this process, please feel free and do engage with us. Put your questions into the question box, and Lee will be monitoring those and give us let us know that we have questions, and we'll give you those answers as regularly as they're coming through. So once again, welcome, and let's dig right into it. So as Lee mentioned, today is the 2nd of October, and it's into the final quarter of 2019. And for us at Wealth Migrate, we tend to have investment cycles that follow the quarters. So we are currently at the end of an investment cycle, and what that means is that the majority of our deals that are currently on the platform are literally 3 or 4 days away from closing, that we will no longer be accepting investors into those particular deals. And as the next deals come on in the next week, we will be loading up a whole new suite of opportunities from new service providers around the world that will be coming through the system. So today is in a way at the end of a quarter. When we do have these monthly webinars at the end of a particular quarter, it's often a bit of a retrospective and giving new members an idea of what kind of deals have come through the system. There are 1 or 2 that are new and that we will be talking about, but I think for the majority of the deals on the platform today, it's going to be more of a bit of a retrospective, and also celebrating the fact that in the next 4 to 5 days, at least 4 or 5 of these deals will be closing, which is always a great thing for us and our investors to know that we're moving into the next round of investment. So I'm going to start with them very quickly as we go through them. And Lee and Paul, at any time, if you'd like to add your opinions, your thoughts on the deals, please just jump right in as usual. I think you're very used to our format. So what I would like to do is I'm actually going to start at the bottom. Lee, can you confirm that you're seeing the marketplace page?
No, we are still seeing you.
Oh. All right, great. So let's make sure that people can see my screen. Please let me know, Lee, when you can see my screen.
There we go.
All right, brilliant. So this is our marketplace page on the Wealth Migrate platform. So once you've gone to wealthmigrate.com and you have signed up and gone through, given us email and a password so that you can sign up as a member, you will come out at this, which is the marketplace page. For first-time investors, you will see these two. You can complete your profile. We do need to verify the identity of our investors, along with all other global platforms, to make sure we are complying with the global financial regulations around investment. And there's also an opportunity that if you would like to learn more about property investing, there's a link that takes you through to our education portal. And on that portal, there are a whole bunch of resources to support you on your journey as a real estate investor. Below that then are the deals that are currently available or that are in the process of their final closing. And as I said earlier, what I want to do today is really just start quickly at the bottom and just highlight that we have about 4 or 5 deals at the moment. For those of you who this is your first time with us, this is what a deal card looks like. It gives you a nice picture. It shows you the country in the top left-hand corner. It tells you what is the minimum investment that you would need as an investor to be able to invest into this. The status is key, because what this deal is saying is that it is funded. In other words, we have already fully funded this. There's no space left for any new investors. The next section will give you insight into the actual returns that the sponsor is targeting. And there are three key metrics that we use at first glance. When you click into a deal, you will get additional information over and above these, but these are the 3 key ones. The first one is, what is your internal rate of return, annual internal rate of return for the deal? And this particular deal, for example, at 11.47%. It then tells you the expected term of the deal. Now, anytime a sponsor brings Wealth Migrate an opportunity, they also have to project at what point will they, as the sponsor, exit the opportunity. In other words, they think they're going to buy the opportunity now, this medical building. They're going to work it for 5 years, get rental, increase the value, maybe make a few amendments or change the rent roll so that it increases the value of the property because they have better tenants, whatever their plan is. And then at the end of 5 years, they will sell it, and the expectation and the hope is that they will have, by running the activity for that 5 years, they would have increased the value. So in addition to the income you would have got from rentals, at the point of exit, you also then get the capital gain. This 5 years is really a guideline. It's not here to say that they will sell exactly to the date, 5 years past the term at which it started. There is a bit of flexibility that the sponsors themselves can apply. And the reason this is so important is that, let's say, for example, that in this particular market, in Midwest USA, there is a market crash along with other crashes, then it would be a bad time to sell. And the sponsor can make the decision that either they want to wait another year, for example, for the market to start rising again before they sell and exit the deal. Or let's say after 3 years, they realize that the market is at a peak and is about to dip, then they might sell early after a 3-year period. The guideline is 5 years, but they have a bit of flexibility on either side. The last piece is the equity multiple. This is a measure of, for every dollar you invest, how many dollars will you get back at the end of the time? And that how much you get back includes both your rentals, your quarterly payments that are coming back to you as dividends or as rental payments, as well as the gain. So in this particular deal, they are saying that in 5 years, for every dollar you spent, you will get $1.62 back. And that's the key metrics that you can see on any particular deal. So the last piece of information that's really important here is to understand who is the sponsor. Wealth Migrate is a real estate marketplace. We are not a real estate investment firm. These deals are not our deals. Instead, we partner with the best global real estate investment firms from around the world. We have a very strict process of selecting who we allow to bring deals to our platform. And they themselves need to provide their information and their track record to you, the investor, so that you can really understand who they are and what expertise and experience they have. A little bit later, Paul and I can have a chat about what are the requirements we look for in a sponsor, because it is the most fundamental piece. Our CEO, Scott Picken, often says that finding a good opportunity is not so much about finding a good deal, it's far more about finding the right partner. And that's something we hold very firm, and it's at the core of how we make decisions around who we allow to bring deals to our platform. So these deals here, there's been a flurry of activity from one of our sponsors, Allvest Investments, in the last 2 months. And you'll see we have got Medical 25, Medical 23, we've got Medical 22 that have all been brought to us by Allvest and are all now fully funded. They are about to bring us a new opportunity, Medical 24. How their numbering works and why they skipped out Medical 24 at the time, we can certainly ask them. I understand that in this particular case, they started working on Medical 24 and it was taking them a little bit longer to finalize the deal. And during that time, Medical 25 came along. So that's just the idiosyncrasies of how Allvest Investments handles their naming. Some other opportunities that we are closing in the cycle, Upper Grosvenor 267. This is a great little flat in the UK. The UK market for us has really become exciting in the last 6 months with Brexit, year to 6 months. We believe there's great value to be held in the market at the moment in the UK because of the exchange rate, number one, but also we think the market is getting near to a bottom. So it has certainly, the UK market has been at a high in terms of its own real estate cycle for quite a long time. And with Brexit, the last 2 years has seen that market consistently getting lower. The market has dropped. And that's really when you want to start looking for value, is when everyone else is beginning to pull out, sell, and is selling low. A fundamental principle is buy when everyone else is selling low. So we believe the UK market is going to get more exciting. We probably have another year of being in this space, and so you can expect to see a lot more UK opportunities coming through our platform within the next 12 months. Yes, Lee, I see you've come back online. Is there a question or a comment you wanted to make there?
I just actually wanted to remind you about our investor that had to pull out, and that there is, although this is closing at the moment, there is 25,000 dollars equity that has become available in the last couple of days due to an investor that has had to pull out. So if there's any of you that would like to take up the 25,000, all of it or part of it, please just reach out to Lyndon and myself and we can help you through that, as the deal has already been taken off for funding on our platform.
Correct. Thanks, Lee. I think that's a great point. Thank you for reminding me. So this is a fully funded deal. All our investors are in it. We've raised the full amount, and then we heard literally 2 or 3 days ago that one of our investors was unable to meet their obligation. And so we've literally, we'll be closing this deal literally within the next week or two. And so if there are any investors who would be interested in finding out more about this particular deal, please reach out to myself or Lee. If you want us to talk through that deal in this session, because it was closed, we weren't necessarily going to focus on it, but please just put a comment in the question section and we can certainly come and give it some attention. Thanks, Lee. I appreciate you giving us that feedback. What I'd like to do then is really focus on the top 3 deals today, the ones at the top of the platform, and maybe Oklahoma down here, because that was an exciting deal, even though it is about to close in 3 days' time. And if you haven't started moving your money today as an investor, it's unlikely you would make it in time. But once again, great opportunity to learn, so we may get around to talking about it. The one I want to start with is the one in the middle. I'm going to do this one very quickly, purely because it is only for a very small section of our investor base. A very exciting deal. It is the Southwark Village Construction Finance Investment. Only available at this point for investors from South Africa or who have a South African bank account or can get a South African bank account. It is also a type of deal which we call an independent structure deal. So just bear that in mind. I will have a conversation with you all probably in about 5-10 minutes around what that means in detail. At very high level, it means that Wealth Migrate is not creating a separate legal entity for all our investors. The investors instead are going straight into the investment with the sponsor. That is why it's independent structure. In other words, Wealth Migrate has not put in place a structure for this deal. The very high level on this is that it is a financing opportunity. So the team that's here with us from Opportunity Private Capital, very experienced team. They run a development model where they do not use banks to finance. They have been going for extensive time period since January 2006. They have just in the last 4 years completed 400 million rands worth of deals in the way that they are currently offering this deal. You contribute to the financing up front. They pay you interest on the loan that you have given them. You hold the underlying asset as security, and they pay an 18%. That's correct, an 18% interest per annum. Now, in most cases for this particular deal, it's a much shorter turnaround period. You can see it's 6 months. And what that means is that by the time the deal finishes in 6 months, they will calculate a pro rata percentage. It's 18% per year. So if it's only been 6 months, therefore you'll get a 9% on your funds. Once again, if there are any questions or you'd like more information on this directly, we can send you a whole range of information. There are webinars that have been recorded with this team explaining both their business model as well as this opportunity. There are a whole bunch of documents that you can come and download in this in the deal page. What I would like to do just quickly is launch our poll. And so let me just get to that point, because what would be very valuable for us to understand who is listening today, how many of you have been through our system before, been through one of these webinars before, so that we can understand how much detail we should be telling you about different things. So you should have a poll that has popped up on your screen. It's literally asking you to please select the answer that best describes yourself. And it is, are you new to Wealth Migrate investing? Are you an existing Wealth Migrate investor? And is this the first time on one of these monthly deals webinar? So if you could just fill that in for us quickly, it'll help guide me to give you the most value today, which is really what we are committed to doing. While that poll is completing, thank you. I can see huge amounts of numbers already. We have 75% of our webinar attendees already having completed that poll. So that is significant. We're getting a huge amount of response already. So I really appreciate everyone for doing that. While that completes, I'm just going to go back to the marketplace. All right, and let me give it another 5 seconds. I know this poll is quite simple, so we're not going to take too long on it. And it seems like we are stopped at the 80% level. So thank you, everyone. The results of the poll are that 33% of our audience today are new to Wealth Migrate investing. We have 40% who are existing Wealth Migrate investors. So to our community, to our family, welcome back. It's great to have you on. And that over 60% of you, this is the first time on a monthly deals webinar. So this is the first time that you've been with us in one of these processes. Lee, I'd like to move on to Upside Avenue Multi-Housing, unless you've got any questions that you need me to answer at this point.
No, Lyndon, there's nothing that has come through at this stage. So no, we're good.
Right,
we're
brilliant.
good at the moment.
So Upside Avenue Multi-Housing Income REIT. Now, for those of you who know us, who know our investment principles, our investment strategies, you will be very surprised to see that there is a REIT on the Wealth Migrate platform. And the reason that we normally do not encourage investors, purely from our own personal opinions and how we all invest at Wealth Migrate, the reason we don't normally encourage people to invest in REITs is because most REITs are publicly traded. In other words, they are on a stock exchange. And what this means is that if the stock exchange, the investor community on a stock exchange gets nervous, let's say there's a global downturn in the economy, and on one particular day, everyone gets the jitters and thinks today is the day to get out of our stocks on the stock exchange, the REIT can plummet in value just like any other stock, even though the underlying assets, underlying real estate has not changed in value at all. So the value of your investment is completely unrelated necessarily to the direct value of the underlying real estate. Instead, that price is determined by investors' emotions and behaviors. Now, for that reason, we do not normally like REITs, public REITs. This is a private REIT, which is slightly different. And what that means is it is not publicly traded, it is not on a stock exchange. You buy into the REIT, which I'll explain in a second, and the price is always set by third-party evaluations of the underlying real estate property, which means that the price at which you buy in it and which you can sell is determined by regular actual evaluations of the real estate value that's sitting in that REIT. So as we have so many first-time real estate investors joining us today, let me just give you a context. A real estate investment trust is a trust that you invest in, and that trust has managers who then go and invest on your behalf into a range of different assets. So it's not just a single deal. They will own maybe 5 or 6 or 10 different real estate opportunities. And that's the case with Upside Avenue. Upside Avenue is a REIT that is run by Casora Capital. You can see down here, Casora Capital is the sponsor, and they have an advisory firm, the Casora Investment Advisory Firm, that actually does the selecting of which deals they're going to invest in. These guys really specialize. They have a great focus on multifamilies. Now, I know in America, multifamilies are a very common asset class that most people understand, but for the rest of us globally, that's not necessarily true. A multifamily is a complex of a single real estate investment that might have within it 25 different apartments in a secure development. And the asset is owned by a single owner, in other words, Casora Capital or Upside Avenue, and they rent out those units to families. So that's where the name comes from, multifamilies. The income, it's often a very income focused type of investment. In other words, rentals are key, and you make your decisions around which ones are good based on what percentage of the units have been rented out at any one time, and are there any opportunities to increase the rent that is being paid by doing renovations on apartments or changing the kind of tenant you have. Now, in this particular case, Casoro Capital or Casoro Capital running Upside Avenue, they tend to like opportunities where there is rental. In other words, there is a secure tenant base inside the apartments, but they also like looking for something where they think they can add a bit more value than just rental. So they're looking for opportunities where the apartments, when they buy them, might be a little bit run down, so that if they spend money in the first 6 months to a year, they can significantly increase the value of the opportunity, both because people will now start paying more rent, but also because through that, the underlying capital is worth more. So this is a great opportunity. In this particular case, they are splitting their targets, their financial targets, 50%, 50%. So you can see here that their investment, their projected annual return is around 12%, 11.4. And what they are saying is that they will be paying or targeting paying 6% a year in cash as taking rental money, but then their plan is that over each year they are adding 6% to the underlying capital value, so that when they finally sell, your money that you spent in the building would have increased by 6% a year, plus you would have got 6% a year in cash back from the rentals. This opportunity we are wanting to close very shortly, within the next week. There is an opportunity for us to put it back again after that and open up for another bunch of investors, because it's an ongoing opportunity. But for this particular investment round, we will be closing this in about a week's time. Lee, is there anything you want to add? Anything I've forgotten? Anything, or Paul, any comments you want to make around Upside Avenue before we move on to the next one?
No, that was all good, Lyndon. I can't think of anything. You covered it very comprehensively. I guess with something like that, I like the way you said it was a private REIT, because it is different, and it means that people are focused really on looking after the investors, keeping the costs low and things like that.
Yeah, great, Paul. Thanks. You're 100% right. I think one of the when we met this team, and we have certainly met them, they've also come out and met our investors in different parts of the world in the past. And one of the things they really do focus on is making sure that they look for an opportunity where they can cut down on the operating costs. So even if the rentals don't increase, the profit that they can return back to investors, they're looking at increasing through cutting those costs down. So I think that was a great point. Certainly something we appreciate about the skill set that sits behind Upside Avenue. All right, let's move on. Lee, please do whatever you can to encourage our listeners today to ask us questions. I'm always very nervous about talking too much and that the sound of my voice gets boring, which I'll try and make sure I don't do too much of. So I'll keep the next two very short and sweet. But if there are any questions, guys, please pop them in the question. We really do like engaging our audience during these webinars. I certainly, as I've said, I think there's a great risk of me getting boring for everyone very quickly.
We do have one question that has come through from Francis, and she would just like to know if the quarterly returns for Upside are also paid out as dividends to investors.
Absolutely. So thank you, Francis. Thank you for saving me from just rambling on. I appreciate you getting involved in the conversation, and really do request everyone else does. So yes, Francis, the returns are paid out quarterly as dividends directly to investors. One of the key things about the Wealth Migrate system is that we have an internal financial transaction management system. We are actually currently switching from one provider to another, so there is a bit of a gap over the last 2 months while we are completing the switch. It's a highly technical switch that requires a lot of security programming, so that's just for all of our existing investors. You will know this because we've been communicating around it. But what it means is that you have a transactional account on the Wealth Migrate platform, and When dividends are returned, they are returned into your transactional account on the platform. You can withdraw them at any time. There's absolutely no limit on when you can withdraw it, and it's an instant process. Or you can immediately take it and reinvest it into the next deal without having to withdraw it, and it goes back into your bank account, and then you have to take it from your bank account and put it back into the system. And that's why we have this internal transactional account, to really make your reinvesting process as simple as possible. And a quick little plug here, Lee, if I may. Tonight we're going to be having on our Power Hour evening, tonight we're going to be talking about the 10 mistakes investors make most often. And one of those mistakes, I'm going to give it away, but why not consider this a trailer for tonight, a preview. One of those key 10 mistakes is not reinvesting, not using compound investing as a strategy in your investment behavior. So one of the key things we enabled when we built the platform was this transactional account, so that it makes it really simple for someone to take dividends that will get paid out quarterly and immediately put it back into another deal, so that over the period of years that you're investing, your investment grows significantly quicker when you're using the compound nature of investment. Now, if all of that was very technical, some of our investors, that might be the first time you've heard the terminology compound investing and what it means, please join us tonight for a really great webinar on the 10 mistakes that investors most often make. And there you go, that's about as much as a plug as I'll make for tonight. I promise I won't do too many more of those in this session.
I will put the registration link into the chat box, so anyone on this call who has not registered already, welcome to register and join us at 5 p.m. GMT time, which is 7 p.m. South African time.
So Lee, I like that. Was that 5 p.m. GNT, as in gin and tonic time?
Oh, definitely. It's always gin and tonic time, because it's always 5 p.m. somewhere in the world.
Well, except for our investment team that obviously is remarkably dour and sober all the time in managing things, but please do come along, bring your popcorn and your G&Ts tonight or whatever time of day it is, and join us on that webinar. And let's move on to the next deal before we get ourselves into trouble. So Paul, I'm actually going to jump straight to you, because I know you spent a large part of the last few years really paying attention to the medical space in terms of an investment trend and what's happening there. And while this is a deal in the UK that also plays in the space, I know as WealthE Migrate we've got quite a bit of history and experience in the medical space, both in the US and the UK. Why does medical excite you?
Well, I guess, you know, as you get older, and like me today, having to go to see the doctor, and I looked around the waiting room and I thought, well, you know, all these people are relatively old, and then you sort of think that, you know, as you get older, bits of you don't start working as well, and there's a whole medical profession of not only people, but of buildings and structures that are really designed to look after the huge amount of baby boomers that are moving through our system now. And many years ago, I can remember talking to Henny, who was one of the founders of WealthE Migrate, talking to him about this, and he of course had focused on it, and then but very much within South Africa. And then Scott Picken, our CEO, introduced other countries, in which predominantly America was the medical pipeline, which is, as you mentioned before, we've done 25 and we're going back to 24. But all those buildings are about looking after people who are in that medical pipeline. And what's interesting, a lot of them can just be as simple as, if you have somebody in a hotel bed, it can cost a government or people up to $1,800 or $1,900 a day for that bed. But if you have somewhere over the road that's just more like a mini hotel, it can only cost $300 or $400. So as people move through all these things, there's a lot of things. And of course, then again, there's the living aspect of it too, which is the care homes. Like I visit my mum in a care home, and I think many of you do. But the thing is, as we move more and more towards that, they have to be redeveloped. They have to be, some of them can be bought, and opportunities to develop them more. So yes, it's a sector that I don't think is going to die easily early. So I think, Lyndon, yes, that's a bit of a play on words, but I think it's no accident that WealthE Migrate has done, and investors have done very well out of this sector of the market.
Yeah, Paul, absolutely, you're right. When we have a look back at the investor or the asset classes in real estate that have done best for our investors, particularly over the last 4 or 5 years, medical buildings have really stood out. You know, in addition to the points you've made of populations getting older, needing medical attention, the fact is that a lot of medical buildings are difficult to move out of. So if you have equipment, big equipment that's in those medical buildings, it's often difficult to pick up that equipment and just move it to the block next door if you want to. So your tenants are often very secure, and they stay for a long time, which means you get a very solid base. Even if you're pushing the rentals, they will still likely stay with you. It's very seldom that a medical tenant leaves. So it gives incredible security as an investment. So it's one of the most income protected asset classes in terms of rentals, because you do have this incredible security from long-term tenants.
The other thing,
so
Lyndon, the other thing, Lyndon, is that doctors aren't really accountants, and they're not that. You know, of course, they know numbers and things like that, but they don't actually really go through the fine to print, and they, you know, that they just want to have the right premises in the right place and have a contract, and that's it. So they're not going to be that picky over, you know, clauses and things like that, and the monetary side of things, because at the end of the day, it's a machine. People come in, pay, and move on, and so they do stay there for a while.
And you're right, Paul. We often, the sponsors who are running these medical buildings have been able to get very good rental agreements in place with the tenants that they have put forward into these medical buildings. This one in particular is slightly different in that it's a care home, as Paul said. That care homes are a growing industry as the population is getting older. And what really intrigued us about these sponsors, RB Care Homes, firstly, they have a great record in the UK. This is a sector that about 10 years ago had great potential and was the talk of the town. And about 10 years ago, it was exploited, because every time there's a new trend, there are often going to be people who jump in and exploit a trend and don't necessarily deliver. And through all of that, RB Care Homes has emerged as one of the quality role players in the care home sector. They've been to the UK Parliament as representatives around setting standards for the care home industry. They still feature in the parliamentary reviews and are advisors to Parliament, in particular in the UK, around what the space should look like. So they have incredible integrity. They've got a great reputation. They're currently running and managing 18 care homes. It used to be 17. They've just added another one to their portfolio. And what's really interesting about their business model, which we really appreciate, it says here, you can see that there's an assured cash yield. So you might not believe me, but yes, it's a guaranteed cash yield. And the way they do that is because the majority of their tenants are paid for by the government. So in the UK, there is a requirement that if someone cannot afford to go into a care home themselves, then the government needs to place them into a care home. And the RB Care Homes have got very good contracts with governments for about 70 to 80% of their rooms in these care homes. Now, once again, the UK government, you know, when you're dealing with incomes, when you're dealing with wanting your rentals paid, government in the UK is a very good tenant to have. And this policy of delivering care homes to people who can't afford it has been in place in the UK for 40 years, and it's not about to change. Politically, it would be almost impossible to change that as a government policy. So you have a very good core anchor tenant that takes up most of the rooms, and at about 40% of the rental would be able to pay back the investors who invest into particular care homes, which is why they can say it's guaranteed. Even if 2 or 3 rooms in a care home fall vacant, they're not worried about being able to meet their guarantee, because it is through the secure tenant. So this deal really excited us. We thought they were very smart in the way they did their business model by anchoring it with such a significant tenant. Paul, anything you wanted to add there? It looked like you were wanting to jump in.
No, I'm good. No, I think you covered it well. But you you know, you also have to have responsible people running these, and that has to be their focus. And I think, as you said with RB Care, it's something like, it's not like a few guys that got together and said, let's start a care home. These fellows are invested in the space and have a track record.
Yeah. So when you invest in this particular deal, what you actually are investing in, you get security over the room. So each room, each particular room in the whole care home has its own title, which when you invest, Wealth Migrate aggregates our investors, and then our special purpose vehicle, the legal entity we create just for these investors, owns the title to each of those rooms. So you actually have security on the room, and then we as our SPV is paid rental, monthly rental on that. We pay that out quarterly back to all the investors in this particular deal. You know, we do need to take into account, so they pay us 10%. And then there is a UK tax that has to be covered. So you're likely to get probably 9%, between 8 to 9% back every quarter once we have paid the tax that we will be required to pay through the investment structure. But even then, as a after-tax return of between 8 to 9% is almost unheard of in the UK right now, which is why this deal is so popular for us. We are closing one round of investment literally on Friday, so in 3 days' time. It's been a very successful raise for us. We very excited for the investors who have been a part of this deal. We have huge demand, and within the next 3 or 4 days next week, we will be opening the next round of investment as RB Care Homes is about to launch their next opportunity. Exactly the same model. So if you don't make this one by Friday, don't worry. Early next week, we will be releasing exactly the same returns in a next round of fundraising. Lee, can I move on to our final deal tonight before we take any of the other questions? Are there any questions that you wanted us to answer at this point?
A few questions have come through, but they are generic in nature, so I think we can move on and then we can circle back to them.
All right, great. So let's close out with this one just for today. As I've said, we are coming to the end of an investment cycle for us at Wealth Migrate, which means that in about a week to 2 weeks' time, we will have a whole range of new deals as these ones close. So these ones are great deals that are closing. Oklahoma Class B portfolio, one of my personal favorite deals. And so please understand, everyone, I'm not here to give you advice as to which deal you should invest in. Our role today is literally to tell you what is on the platform. At the heart of Wealth Migrate's principle is that we are not a fund. We do not invest on your behalf. We bring opportunities to our platform, and you as the investor make up your own decisions based on what will suit you, what type of investments are you liking, which country do you want to be in, do you like capital growth or income more? Your personal investment strategies need to guide your decisions. I will share, like I've just done, that this is one of my personal favorites for me, but that doesn't necessarily mean that it's the one that you're going to want to invest in. So please do understand, my role here is to educate and inform, not to give advice. That being said, why do I personally like this? I have invested my own money into this deal. I invest my own money into most of our opportunities on the Wealth Migrate platform, and certainly that applied to this one. And why I like this deal in particular is for 2 reasons. Firstly, we have a long history with the sponsor. Brendan, who runs Infinity Capital, I've seen him literally face to face doing the work he does on every deal, and the amount of due diligence that Infinity goes into, like most of our sponsors, that's one of the requirements, but having actually physically seen Brendan and his team doing it, the amount of due diligence they do on a particular opportunity before they buy into it is quite phenomenal. And in this particular case, this is a series of multifamily holdings, I think there are 6 if I'm not mistaken, that have 827 units. So if you do the maths, that's 827 apartments that make up this investment. And when they did the due diligence, they went through every single lease agreement to understand what it is they were thinking about buying. And that's a lot of lease agreements to go through to understand how long is the lease still in place, when last did it sign, can they increase this rent on the next round, so that when they do their numbers, they've got a very, very accurate sense of what they're actually getting into. Plus, they walked every building. So someone in their team physically went through every one of those apartments. Now, what really was exciting for me is I prefer my investments to be income investments rather than capital gains. Once again, I shouldn't, but I'm going to. Here's another plug for tonight. 10 mistakes to avoid as an investor. This is one of them that has come out very strongly from our investment community, is focus on income rather than capital gains. So I'm not going to talk about that now as much as it's a hot topic for me. I love talking about it. I'm going to save it for tonight, but if you aren't on there, then please do make sure that you're listening to our webinar for tonight. But this deal in particular, with a 96% occupancy, that means 96% of those 827 units have got someone in them paying rent. So once they've crunched the numbers, you have a pretty good sense that what they are projecting in terms of the income you're going to get quarterly is going to be real. And then their strategies of how they're going to increase those rents over time so that the amount you get paid back quarterly increases also excites me. So this is one that I'm really excited about. We will be closing this on Friday, actually, is our final day closing on this one. It was all of these assets were in Oklahoma, which once again, when you're wanting to choose your investments, you're looking for cities where the population is growing. Firstly, as general, but also the area that your investment is, you want population growth, because whenever there's strong population growth, it puts demand on real estate. And in particular, if you're looking at residential or medical, which is why we like both of those, the increasing population growth puts increasing pressure, demand on those kind of assets, which obviously increases their value as demand increases, the rentals getting paid. So that's our deal for Oklahoma. With Infinity, it is closing coming up on Friday. I am not sure, Lee, do you have any updates for me? I haven't tracked this one in the last day. Is there still space in Oklahoma, or are we closed on Oklahoma already?
So Oklahoma, we have a few, we do have spaces left. The issue with Oklahoma is if your money is not already in America, you're not going to make this deal, because this deal is closing on Friday. The transfer of funds is happening on Friday. And if your money is not already in the States, there's very little time for you to get it there.
All right, fair enough. So if you're a brand new investor and you're on KYC'd, in other words, you haven't verified your identity yet on our platform, which is the first requirement before we will accept any investors. That's to make sure that we maintain our very strict global compliance rules around playing by the games. We are not here to do anything that's unkosher. Paul in particular, as head of our global compliance, has huge experience in making sure that we are doing everything legally and compliantly. So KYCing, in other words, verifying who you are, proof of address, etc., is a vital part of the global financial industry, and we certainly adhere to those standards. So if you haven't done that already, it's unlikely you're going to be able to get into this deal, because you won't be able to complete that process quick enough. If you have done that and you are able to go onto our platform and make an investment and complete the actual bank transfer within the next 3 or 4 hours so that it gets there by tomorrow, then that's probably your best bet. If you can't do it within that kind of timelines, then this one is probably going to be too late for you in particular. And with that, Lee, let us jump across into any of the generic questions we've had and anything else that anyone wants to ask about.
Okay, so we've got a question here from Bruce. It's something that took me a long time to wrap my head around. So great question, Bruce. I'm sure there's lots of people on the webinar today who have the same thoughts. And he's saying, please explain the equity multiple factor. Is this the capital return at the end of the 5 years, excluding the quarterly returns?
Great question, Bruce. I agree with Lisa. Thank you. No, equity multiple is all your returns, including your quarterly returns. So I'm going to make it simple. If I have $100 invested in a deal, and let's just say theoretically I get paid back $10 a year over 3 years. So in year 1 I get $10 rental, in year 2 I get another 10, in year 3. At the end of the 3 years, I've got $30 that has been paid back to me already during the duration of the year. Okay, and then let's say at the end of that 3 years, we sell the building for $130. Then over the complete 3 years, I would have got $30 back in rental plus $130 back as capital. So the total amount I would have got back on my initial $100 is $160. My equity multiple would then be 1.6. So for every $1 I put in front, my total return over the full time period was additional $60, in other words, 1.6. And that's how the equity multiple works. Now, in theory, you should be able to say, well, the annual rate of return then over 3 years, if I got a $60 extra over 3 years, my annual rate of return is 20% a year. So 10% I get in cash plus 10% capital gain per year, and that is correct. However, do bear in mind that IRR, your internal rate of return, is not quite that straightforward. And if you want, anyone on this call needs to understand IRR, because it does have something that changes it a little bit from being that simple. We can send you our great help article on understanding equity multiple and IRR. It is on our website, but we can certainly send it to anyone who requests it. Please just drop a note and we'll make sure to email you our help article on understanding IRRs and equity multiples in investing. Lee, I hope that answered Bruce.
Absolutely. We've got another great question from Francis, and it's which is, are all the deals on the Wealth Migrate platform paid to investors as dividends? So this is a great opportunity to explain the difference between equity deals and income deals.
Great, thank you. And let me answer that in two ways. So Francis, thanks for the question. No, some deals are interest deals. In other words, the company is offering us interest rather than rental payments. And we have a choice at Wealth Migrate that we can take that and pass that through and report it to you as interest, or we can take it, internalize it within our special owned legal entity and report it back to you as dividends. So there is a bit of flexibility. In the most cases, we choose to process and pay dividends back in or to pay returns back as dividends, not as interest. But it really does depend on where the deal is based, so that we can assess what would be the best tax treatment that our special purpose vehicle has to pay itself before we distribute returns onto investors. So not all deals are automatically paid as dividends, but the majority of our deals pay dividends rather than, for example, a interest. When you sign up, when you subscribe to a particular deal, we would already have made that decision. So your subscription agreement will be either a loan agreement, in which case you are paid back as interest, or it will be an equity agreement, in which case you are paid as dividends. Lee, you're looking very confused. Is that because of my answer, or have you just got a very difficult question someone's asked?
No, that is an absolutely perfect answer. I think it was a great explanation. So you're good.
You had me worried there for a second.
No,
I didn't confuse Francis in any way.
I need to teach my face not to be as expressive as it is, and it had absolutely nothing to do with your answer. I need to keep my.
You're camera lead, don't forget.
I know. At least I wasn't saying what I was.
So whoever asked the last question, you really confused Lee. Let's just put it like that. The one that she's just read.
There we go. So this is a question from Bawa. Apologies if I'm not pronouncing that correctly, but this is, I am in the UK. I joined a bit late in the webinar, but it's great to have you with us anyway. When I received the money back from the US REIT investments, are there taxes paid in the US, or do I have to pay them here in the UK?
Great question. So Lee, I'm going to answer that in two ways. First, I'm going to tell you the taxes that Wealth Migrate has to worry about. And then secondly, I'm going to tell you that I cannot give you individual tax advice as to how you need to process the returns that come to you, because it will differ based on which country you're in. And there might be, for example, double taxation agreements between your country and the country of our SPV, etc. And I'm not a tax advisor. However, as Wealth Migrate, we do create legal structures for each deal. And this is very important for our investors to understand. One of the reasons that makes Wealth Migrate unique is that we can take investors from around the world and enable them to invest into deals, for example, like in the USA. And one of the mechanisms we have to use to do that is to create our own special purpose vehicle, which is just a technical word for saying a special company that is really in place for each deal. So if you, Lee, are going to be investing along with 20 other people into a particular opportunity, we will create a special company that just has you as those 20 people as the shareholders in that company, for example. Now, that company itself is then what invests on your behalf into a deal, into a sponsor. Since Bawa, since your question is, and once again, please apologize if I pronounced your name wrong. If it's a USA deal, we do have to create a special company in the US that has to pay USA taxes, because that is the law in the US. So we first, as Wealth Migrate, we get returns that get paid to our company in the US, the special company that just the 20 investors are a part of. And that company in the US has to pay taxes before we can take that money and distribute it to our investors. Now, once we've distributed it to the investors, each investor will need to have a look at their own way that they declare tax, how they process it in their country, whether in their country they can count the fact that tax has already been paid in the US and therefore through double taxation agreements can select not to pay the tax in their country. They would need to probably get advice on that. Paul, I know this is an area of expertise, or certainly that you have been helping Wealth Migrate over the years be very firm around in terms of making sure that we are doing our bit, but that we are not tax advisors. Is there anything you want to add here?
Well, just it makes it often complicated with things like words like special purpose vehicle, but I often like to think of it like if you had a couple of people you're going to invest in something, you'd probably put your name on the title of a property. You know, that's the way in which you'd record the fact that you jointly owned it and whatever you would do. But the problem is you get more and more people, you have to have some entity that actually is able to aggregate those people together so that together they own that particular property. And so it's a mechanism to make it relatively easy to do that. When you create an entity though, under law in most countries in the world, that entity then becomes a person itself. So it has its own taxation responsibilities and things like that that must be met in the country that it's in. And then that's shared by those people. But when eventually money comes out of that special purpose vehicle or that entity towards you as an investor, then it's looked at that your responsibility is to pay the tax that's due to you in your country. But the wonderful thing in all of this is that most countries that we deal with have double taxation agreements. That means if you pay, and for example, in Australia where I live, if you get a return of a dividend from Australia and you pay say 10% tax in Australia, or the entity pays it on your behalf, you actually can get that set off against the tax in your own country. So it's not like you have to pay tax and then pay tax again. It's actually netted off your actual eventual tax situation. And so when we look at where we structure the SPVs and all those sort of things, we look to see, well, what is going to be most cost effective for the majority of investments. And that's just another part of the service that Wealth Migrate must do on behalf of its investors.
Yeah, Paul, I love that. And for all our first-time investors, at the heart of what Wealth Migrate is trying to achieve is to make global investing simple. So, you know, previously, if you wanted to, I paid my taxes in South Africa, if I as a South African citizen wanted to invest in the USA or the UK 5 years ago, it was almost impossible. I would have to set up my own structures. I'd have to get legal advisors in each of those countries to create companies for me, plus tax advisors, etc., etc. And at Wealth Migrate, we really are trying to say, how can we make global investing so that you can have a portfolio of commercial real estate around the world without having to do all of this, because we do it for you. So that's really at the heart of what Wealth Migrate is about, is simplifying global investing for you. So thanks, Paul, that's definitely at the heart of it. Lee, the next question. I know we are running out of time. So firstly, can I just quickly, Lee, before your question, for those who do need to go, it's on the hour. We really appreciate you having been here. If you have any follow-up questions that we haven't answered yet, please do reach out to us directly. get hold of us on email or in any other way, lee@wealthmigrate.com is probably the best option, and we will get back to you. For the rest of you, I commit I will stay on until we've answered these questions, so you're welcome to stay with us if you have questions or if you just want to keep listening. But if you do need to leave us, thank you very much for joining us today. It's been a privilege to have you with us. And Lee, let's jump on to the next questions.
Correction, my email is leerush@wealthmigrate.com. I'm one of the few people in WealthMigrate that has their name and their surname. Most people just go by their first names, which makes me super special, if anyone's wondering. So leerush@wealthmigrate.com. I'm happy to help any of you. Our next question is from Gregory, who says that his money is with a Namibian bank and also with an American bank. So can he invest in the UK, in the Cape Town opportunity using his American or US funds?
Great, Gregory, what I'm going to suggest is I think after this call, we can make contact with you directly and let's see how we can support you, because that's quite a unique situation. So let's see how we can support you directly. So Lee, if you can just make a note that maybe if you could just connect us, Gregory, myself and Lee on email, and we will see if we can support you directly on that one.
Yep, absolutely. Okay, Bruce has asked me to send him the details on the IRR, so I'll get that through to you, Bruce, when we finished on this webinar. We've been asked whether the forecast IRR and equity multiple is before or after tax on SPVs and WealthMigrate fees.
Great question, Gary. So at the moment, it is before taxes and WealthMigrate fees. We are currently in the process of making changes to our technology that actually gives you both. It gives you the before tax and the after tax. Now, the reason that platforms globally provide the IRRs and equity multiples on pre-tax is because investors are often comparing underlying investments against each other on different platforms and in different tax regimes, knowing that they are going to have to pay the tax on it anyway. So because the global standard in platforms, whether it's share trading platforms, whether it's real estate platforms, is to provide IRR as a pre-tax number. And also remember what we've said earlier, that sometimes the tax will depend on which part of the world you're on. So as a global company, we don't necessarily have a single after-tax IRR, because, for example, even if we as WealthMigrate have paid some of the tax in the US first before we distribute it, you might be able to claim that back, in which case your IRR will be different to someone else's based on your own individual tax scenario. So it makes it very difficult globally for the financial industry to provide after-tax IRRs. That being said, we do understand.
For Lyndon, if you had the luxury of living in Singapore, they don't tax you on any of your worldwide income. They tax you only on your Singapore income. So it's a very simple calculation for a Singaporean to work out what their return is from an overseas investment, because they don't have to consider taxation for Singapore.
Yeah. Gary, that being said, we do understand that our core values are trust, transparency, and alignment. And the transparency one is very key for us. We do want every investor, once again, listen to our webinar tonight about 10 mistakes investors make. One of the key ones is not understanding fee structures and tax implications. So we do want to make sure we are very transparent around fee structures. Our fee structure is very clearly explained on our platform, but we are looking at how we can make it very clear on a deal by deal level. What are the implications of the fee structure? Does it drop your IRR down from, say, 11.4 to 10.6? And then we make a whole bunch of assumptions, which once again we are very transparent about, that you are an average investor in a country whose tax is more or less the same as this, for example. So we are trying to see how we can add far more information to the investor, but just bear in mind my overarching comment here around it's very difficult to do that, and the global standard is therefore to do IRRs on pre-tax scenarios.
Great answer. Tamron has asked, should the sponsor and the due diligence provider be the same company? How are they protected? as an investor?
Once again, that is a superb question. Sorry, Lee, who was it that asked that?
Tamarin.
Tamarin, thanks for that question. Yep, thank you very much for that question. So, in some cases, WealthE Migrate has a range of different sponsors who bring us opportunities. In some cases, the sponsor has their own internal due diligence team. And what they will do is they will find a partner on the ground. And let's take who's in front of us right here on our platform that I could use as a good example. So Allbest, let's use Allbest here. You'll see that on our deal thing, it says Allbest and due diligence the sponsor and due diligence provider are both Allbest. Now that's because Allbest themselves are a real estate investment firm, which means that they do not necessarily manage deals on the ground. What they do is they have a very good due diligence process that goes and finds other real estate active players. So in other words, people on the ground in the cities that they're really interested in who are running real estate opportunities. And they will go and select the particular sponsor that they think is good. They will do due diligence. Where we, firstly, for any sponsor to bring us an opportunity, we need to understand and verify that we support and agree with their due diligence process. Only once we really have an insight into that will we allow them to bring us opportunities. So that's key for us. There is an advantage sometimes when the due diligence provider is different to the sponsor, in that you are getting that third-party guarantee. Allbest in particular, we've often had conversations with them around, for example, saying, you know, guys, we think you're missing a trick here, that you're putting yourselves both as a sponsor and the due diligence provider. Because, for example, I know this particular deal, the actual partner on the ground that's running it. So, in other words, you could say the sponsor that is a partner with Allbest is a very different company that Allbest's own investment committee has done extensive due diligence on, and therefore they should say that on the platform. They have chosen to keep it the same just so that their brand is coming across stronger in the process. So once again, it doesn't have to be that the due diligence provider and the sponsor have to be different, but there certainly is value to having third-party opinion or due diligence verification on many deals.
Absolutely. I hope that answered your question, Tamarin. If you've got any more questions around that or need further clarity, please just reach out to us. Francis has asked, in which country does WealthE Migrate set up these SPVs?
Great question, and unfortunately there's not a single answer. It really depends, and sometimes we might even have two SPVs in a single deal. So for example, any deal that sits in the USA, we first have to have a SPV that sits in America. The USA's compliance regime and tax scenarios means you actually have to have a SPV in America, in the US, that stops the tax payment at that point and pays tax on behalf of the entity. Then we have a secondary SPV, and it will vary depending on the deal. So this is something Paul really leans in on and helps us figure out the best strategy going forward in terms of where we have our SPVs that aggregate investors. It's not always the same. We have got a new system that is tending to put most of our SPVs based out of Australia. For a whole range of, with Australia being one of the most regulated environments in the world. If our SPV is sitting in that space, it makes it very easy for us to get compliance clearance from most other countries in the world in terms of accepting investors, because we have gone through Australia for our SPVs. But it is not always that. It will really depend on the particular deal, what kind of money movement we're talking about, whether it's interest or dividends, and whether that's the right place and the best place to have it. But we do have a team that really looks at each deal and figures out what's the best place to put it. Paul, I'm not sure if you want to add anything to that.
No, I'm okay with that. It's interesting thinking about that each deal you've got to actually work it out. But you know, that's why you have a team of experts around the world, and these lawyers, they aren't cheap. I often sit there, sometimes I'm sitting there and thinking, this guy opposite me, we're paying him $600 an hour to help us sort something like this out. But you know, that's what you have to do, because unfortunately, like if you all of a sudden got a deal in a particular country, like you mentioned, Linda, with the United States or the United Kingdom, or even in India or somewhere like that, the where the SPV is often very, very important in terms of the different taxation considerations and things like that. So no, I think you explained it well.
Great, thanks, Paul. Lee, next questions. Are there still more questions? Anything we haven't answered yet?
That is all our questions. If there's anything else that anyone wants to know, please feel free to pop it into the chat box or the question box. I have put 2 links into the chat box. The first one is the link to the webinar tonight. If you haven't registered and you'd like to hear the 10 mistakes to avoid when investing, please just register via that link. And there's another link that I've put in there about which you can register for, a 4-part webinar series that we will be running on every Tuesday this month. It is our Wealth Point 5.0 webinar series. And it's all about how to build a successful global real estate portfolio, become a global citizen, and live wherever you want to. We will be inviting guest speakers onto those. The first one happens next week, Tuesday. It's 5 p.m. GMT time. You're welcome to bring your GMTs though, which is 7 p.m. South African time. And that will be on the 5 keys to offshore real estate investment success. We're having one on how to immigrate overseas financially and physically. Our third one is, would you like to sell your business for hundreds of millions, invest around the world and live wherever you want? We're excited that Hilda Landestedt will be joining us for that one. And our final webinar in our series is 6 ways to expand your global real estate portfolio through strategic partnerships. You only have to register once on the link. It will send you all the details on all 4 webinars. And we really think that this, as we head to the end of 2019, that this is some valuable information that our guest speakers and Scott would love to share with you. So please feel free to register for those.
Great, thank you, Lee. I know that part of that webinar series is that for our South African investors, our South African members. I know there are a few of you tonight who are from South Africa. We are building up to a phenomenal event that's actually coming place, I think, towards end of November, is it? Where we are having a live events in South Africa. You can come meet our team. We will be running events specifically around helping people grow their knowledge. Some phenomenal guest speakers actually coming to the live events as well. And that these webinars almost in a way a pre-taste of some of the value of the events. So if anyone is really interested in joining those events, come meet the Wealth Migrate team, ask us your questions, grow your knowledge, which is, once again, a plug for tonight, 10 mistakes that investors should be avoiding. That's one of the key points we mentioned again tonight. I think I've given away 3 of them already, so please do come and join us tonight. Please do keep in touch with us. We're about to launch the sign-up pages for those webinars. For that event coming up in South Africa. Very exciting event that's heading our way for our South African members. On that note, to everyone, firstly, yes, Lee, last comments.
Sorry, just Nao has come on and said, where are the videos saved for later use? Nao, after this, a copy of the video with the link will be sent to you. We also upload it to our YouTube channel, so you can just search for Wealth Migrate on YouTube, and they're over there for you to have a look. If you think that it's added value, things in there that you would like to share with your friends and family, please feel free to share the webinar. We would obviously like to help as many people as we can.
Lee, thank you very much for being with us tonight, all the way from Dubai. Paul, thank you for joining us from Australia. To all our listeners, we had a huge attendance tonight from, I think in the end, we had something like 14 different countries represented. I'd really like to thank you all for being with us tonight. It's a great privilege to be able to work with you and partner with you as you grow a global real estate investment portfolio. If there's anything you need, follow-ups from today, please do email us, leerush@wealthmigrate.com or lyndon@wealthmigrate.com, and we will be happy to answer you directly and support you in any way that we can. Guys, thank you very much. Paul, Lee, have a good night your side, and to the rest, thank you very much for joining us.
Take care, everyone.